Aloha folks, welcome back to another video. My name is Mark, Mr. Dividend Investor. Thank you so much for checking this video out. It really means a lot to me. If you're new to the channel, welcome. I do a lot of stock reviews as well as portfolio reviews of my M1 Finance and Webull. So hopefully by the end of this video you'll like what you see, you find it entertaining and informative, that you'll subscribe and hit that like button. With that said, please remember that this is not in financial advice. This is me just sharing my opinion and what stocks I look at and what stocks I possibly invest on or have been investing on. With that said, let's take a look at this company called Stepan, ticker symbol SCL. So it is a company under the materials sector. It engages in the sale of chemicals. So they do a lot of products. There's about 650 plus products with 390 plus formulations. What I like about it is that they service 20 plus, and then there's 19 global sites. So interesting company that works with chemical parts. If you look at their presentation, because of our current situation, their net sales and operating income has increased from 2019 from 313 million to about 332. Operating income has also increased. Now if you look further, because of the current pandemic, there's also delays in constructions and cancellations. However, if you look at their net debt cash flow, you can see the downward, so which is great. So they're financially strength to enable to grow, which they're growing. Capital expenditures were 21 million. Cash flow to operations is 65, so that's great. If you look further to the priorities, I like the fact that they're wanting to do more cleaner, healthier, more efficient work. Now if we look down to their website or their presentation, you can see that debt repayment is going down from 21, they went up to then 54, and then 23. So they're paying off their debt. Capital expenditures is also going up, which is great. Now looking further to down, you can see more stats. I'll let you guys do that when you guys decide to do your due diligence. Now looking at their dividend safety, you can see from Simply Safe Dividend, they're very safe. Dividend yield is 0.98. Last year they grown about 10%. Again, market cap is 2.5 billion. Now if you look further down to the key metrics, you can see again during recession they increased it. What I really like about it is the dividend growth. Although the last 20 years was 6%, not that great, could be better. Hopefully last year was 10%, so which is good. Last 5 years was 8%. I like the steady growth of increase you can see. However, what I really like about it is it's the 53 plus years of uninterrupted dividend streak. So this is something that I like to see because it tells me that this company is stable, that they've been paying their dividends for 53 plus years. That is amazing. Now you're gonna get paid quarterly, March, June, September, and December, with an annual payout of $1.10. However, if you look down further, the stock could be overvalued. So that's something to kind of look at if this is something you are interested in it. Now looking at the bar chart, you can see that it is currently a moderate buy. It's been a buy last month, 2 months it's been a buy, 3 months it's been a buy. So that's really good to see. 2 strong buys and 1 hold. Now looking further into the Simply Wall Street, you can see that the PE ratio is below the chemical industry, which is great. And one of the highlights has been it grew 10%. Some of the risks is that it's been inside selling over the past 3 months. So future growth, so future growth again is 6.2, not that great, could be better. But that again, that's something that you want to continue researching if this is something that you're interested in. Looking at Robinhood, you can see today it's up 0.3%. For the week, it's up 3%. For the month, it's down 2%. For 3 months, it's up 17%. For the year, it's up 17%. For the past 5 years, it's up 163%. So for my take, I did buy 1 share. I always like to buy 1 share, then I can slowly dollar average as I continue, and as I add more funds into this account, then I'll buy more shares. And then again, my target would be probably 100 shares. We'll start with that. And then as I continue to increase my position, I'll probably add more. Again, this is in the material sector. I try not to make too much in materials. I think I have a couple more. I don't want to increase my material position, so I just want to keep it balanced. That's something that I look at. So definitely something to kind of think about. If you look down, the earnings is on October 21st pre-market, so we'll see how they perform. But if you look at the charts, they've been either meet or exceed the earnings, or they've been beating it, so which is something great to see. Again, thank you so much for watching. If you are ready to do your own investing, there is a link in the comments with my link to Robinhood, as well as my Weibo Finance and M1 Finance, Weibo and M1 Finance. With that said, thank you so much for watching. I appreciate you guys. Please be safe out there. Stay cool. Keep investing. I'll catch you guys on the next video. Mahalo. Aloha.